Burgess and Bolton's Weekly Wrap. Burgess and Bolton's Weekly Wrap.
So hello everybody and welcome to this edition of Burgess and Bolton's Weekly Wrap Up, where we look at everything to do with the London market, technology, change, people, and this week we're looking at modernisation and transformation, and we're going to be speaking later, or we have spoken later, to Claire Knight, and she's going to give us her insights into her experiences, I suppose, of trying to deliver and drive change. This is a pre-recorded show, so don't text in. I will be monitoring the text, but maybe not as often as I might be live, but pre-recorded. But we have got all the usual items. We've got news and everything like that, and we're on a funky new software platform. So this is all new for us. We don't know what we're doing. But that isn't new. That's part of the course. So anyway, here's the news. I've got some news, Ben, if I can remember how this thing works. Yes. So I've got some news this week. So I noticed that AXA have been hit by a cyber attack, ransomware, something we were talking about last week. And it's interesting this, because obviously insurers have got a lot of data. I can imagine if you're sitting on the other side of the fence, hacking into companies, you're going, they're a good prospect. But also, from a cyber insurance policy point of view, there's a massive opportunity here. I think in this article, it just talks about just every organization being vulnerable at some level. And, I looked down the top 10 companies that these people were targeting, and I didn't recognize any of them. Most of them are in North American company. Yeah. They must be pretty big, but I'd never heard of them. So you can imagine there's rich pickings across the board. So yeah, it's really interesting, and the fact that it's AXA in the East rather in Europe means that they're perhaps not as exposed. But I think it just goes to show how vulnerable insurers are, and if that data gets exposed, then credibility.
Slightly facetiously, I've seen some of the insurers' data, so you could probably just spread it all over the internet, and it would make no difference at all to anything.
Yeah.
But on a more realistic level, I mean, it's a very big risk to any organisation, but for the insurance industry, yes, obviously data is huge, and particularly as they invest more and more in it, that's going to be the issue, isn't it? That it's competitive advantage, and we've talked on here about Lloyd's. So yeah, it's going to be a big thing, and it's also one of those things, unlike Y2K and things like that we all have anticipated, and then realised that the IT people sort of shafted us somewhere along the line. This is actually sort of different in that, it's really happening. You can be hacked, and actually they're taking yours and my information. So it's much more real feeling, I think. And actually the fact you can, like we talked about last week, you can shut down whole pipelines of energy and fuel and things is quite scary.
Yeah, it is. And it's the reputational risk as well. It's the damage that gets caused. If you're an insurer and you're dealing on trust, and the one thing you can't do is keep data safe. You're kind of going, well, what's the chance of you paying out on a claim? So yeah,
I think I was going to say that one of the things I spend more and more of my time filling out is long procurement forms about our security and so on and so forth. The problem is, and I will happily admit it on here, I don't know what those protocols are. I am just told what those protocols are by my IT consultants, and I fill in the forms, but I don't know who actually knows what is hackable and what isn't. I think it's you're really relying on the trust of organisations, and that the software they buy is also secure. Because I think we've had instances of some of the security software coming out of Russia and then being suspect, for example, or China and being suspect, or somewhere else being suspect. So it's really just one of those difficult. I think I'll just put all my stuff on paper.
Yeah, maybe
I'll just fax it like we used to with the old fax machine.
Yeah, I was talking to one of the, I always call them kids, but they were 25, 26-year-olds in our office about fax machines. And they were just going, what's a fax machine? I don't know what you're talking about.
Yeah.
Yeah.
It's the only thing the Japanese invented, apparently.
Yeah.
The fax machine.
Excellent. Right. On a different tact, she's the, sorry about the pun. So this ship is sailing across the Atlantic without a crew. So the first fully autonomous ship is to attempt to go across the Atlantic without a crew later this month. And I was a bit surprised by this. I thought they would have already done it. There's a lot of talk about driverless cars and autonomous vehicles and things like that. I would have thought ships would have been a good place to start. They're basically just shipping stuff around the world. Maybe they wouldn't get stuck in canals and stuff if there was a computer driving it. Who knows? But I think this is good. It's got implications, obviously, for insurance, the types of risks that are underwritten in maritime, and yeah, I think it's a really good innovation. I think it's really interesting to see how it pans out.
I think it is. I was just thinking, though, looking at that picture, if I was like just swimming along, say, somewhere on holiday, and I saw that, and I could just hook a little lasso a little rope over it, would it tow me to America or something? It would be quite good, wouldn't it?
I wonder how the sophisticated they've thought about this, because if you only thought about this in the last 10 minutes, then there must be loads of other people going, I'm just going to have a free ride across the...
Maybe it zaps you somehow.
Yeah.
Tasers you. I mean, I would have thought too that this would have been done before, and it's surprising. But when you think about it, it is quite a... I mean, you can think, well, maybe there isn't much to bump into, but there is in shipping lanes and things. You really do have to rely on this not creating mayhem. And the insurance implications, they must be quite fascinating, really. Yeah. I mean, what if you hit some kind of liner and hole it, with this, and then it sinks? You've suddenly got a huge marine liability. I hate to mention that to the underwriters, but you do. So it is. It's quite intriguing, isn't it, as an idea? It's like those sci-fi movies of ships in space, transporters and things.
Yeah, indeed. So from the Mayflower to the mayhem in one.
Yeah, I like it. I like what you've done there.
Yeah, really yours. But anyway, I stole it. Okay, let's move things on. So as I said at the top of the show, we have a guest. So this week we are talking to Claire Knight, who is an independent consultant who's been working in the London market for many years in various guises, LMA, Brit, Hiscox. And we're going to pick up the interview here where we are asking her how she got into insurance and then into some of the challenges around delegated authority. So here's the clip. So welcome, Claire. Delighted you could join us today. Looking forward to the conversation. Perhaps we could start by just telling us how you got into the market in the first place.
Yeah, definitely. So like most people in our market, fell into it. Started life as a professional indemnity litigator. So started at one of the biggest law firms in the world, and then moved on to a specific litigation company working with insurance companies. And then back in 2013, was given the opportunity to go and work in-house at Hiscox on Secondment, and didn't go back, basically. So moved over to Hiscox in 2014, worked at group level. So I worked on the retail side and the syndicate side, all things TPA management and third-party claims operations, management, which was wonderful. And whilst I was there, I had the opportunity to build a piece of tech from the ground up, which was amazing to help me in managing all of my third parties, including all of my TPAs. After that, I went off to be the DA manager for Europe, and then moved over to be the service company manager for the syndicate. And after a short period working for a cover holder as their head of legal and compliance, I then set up on my own as an independent, and have worked with some really awesome companies. So I was in with Brit for a little while, for about 10, 11 months in with Brit, focusing on TPA management and loss fund management through Vitesse. So I've become a real expert on Vitesse and smart loss funds. And then most recently working with the LMA, which has been amazing on all things delegated authorities and future at Lloyd's.
Cool. And what, just picking up the DA stuff, what do you see as the challenges in the DA space at the moment?
Yeah, so DA is big and it's complex, and it's full of friction and people and admin and burden and disjointed bits. And you know, in the London market in particular, it's a subscription DA market, which makes it even more complex. You know, all of these problems exist whether you're 100% on subscription, but in the London, you know, in Lloyd's, it's exacerbated. And you know, Lloyd's have been trying for some time through the Chorus program and now through DCOM and DDM to sort of pull together bits of centralized kit that can help smooth out this administrative burden and eliminate friction and duplication. You know, the duplicative effort from the regulatory burden is massive across our market. It's huge, you know, and it's dragging us down. And what we're finding at an increasing rate is that syndicates that are able to are trying to move their DA business onto their company stamp. We're also finding that cover holders who historically have been, you know, stalwarts of Lloyd's and would only get their capacity from Lloyd's are increasingly finding capacity from elsewhere, not just because of the administrative burden, but because of the limit that Lloyd's has been placing on capacity in Lloyd's. You know, we've got cover holders that actually really still want to work with us, but they can't because there just isn't the capacity left for them. So it's, you know, there's a real challenge to the DA space, because if we don't get a grip on it soon, you know, the proportion of DA in Lloyd's is already, you know, reducing in real terms. And it's a big chunk, you know, it's 30% of our market. You know, it's a really big chunk of our market. So yeah, we need to take action on it quite quickly.
How much of the cost, Claire, would you say is that DA? Because, you know, the conversation is always about the cost of reducing the cost. So if you could solve the DA problem, would it be a big move?
It would be a big move, right? So there's two costs. There's expense ratio and there's acquisition cost. And I think it's important to differentiate. The expense ratio, if you're doing it properly in a syndicate, is probably around 40%, if not higher, right? And that's if you're doing it properly. If you're not doing it properly, then your expense ratio is going to be a bit lower, but then you're at risk of a fine or a sanction, which isn't that desirable. And then never mind the expense overhead at brokers. You know, brokers only get paid when business is done, right? They don't get paid for all of the deals that fall through, right? They don't get paid for all of the stuff that they do up to, which is huge, right? Lloyd's doesn't see any of that.
No, it's huge.
Right. So, you know, underwriters don't see a lot of that either. So that's really interesting. And they would say that their brokerage is fair on that basis. You know, if they're charging 5 points, I know that in the UK, a lot of brokerage is up to 45 points on the placement, which is a little bit aggressive, but you know, if brokers are bringing that argument that they're worth it, you know, so that's the acquisition. That's the difference between the expense ratio and the acquisition cost. The expense ratio is something that we can actually tackle. The acquisition cost is a commercial discussion. So if you can bring the expense ratio down, you know, even putting 10 points back on your bottom line, that's a massive saving year on year, massive saving. And all of this could be done through, you know, and the recent LMA Project Dare has been, you know, really eye-opening and wonderful. It's been driven by, you know, the LMA set it in motion. They brought 6.6 in to run it for them. I've been working really closely with them on it during the first quarter of this year, running workshops with the market. You know, we've been running countless workshops with managing agents, with cover holders, and brokers, and asking them to think outside the box and innovate. If we started with a clean sheet, what would we do? You know, we don't want to iterate on today's process, but what would we do? And we've had some amazing concepts come out of the market. You know, they're really up for it. The market are bang up for it. You know, and when we've pulled all of these concepts together, which is all on LMA Dare, by the way. So if you've gone on LMADare.com, all of the workflows that we did in Miro through all of these workshops, you know, during the last month, we were out presenting this sort of innovative new world of what it could look like and the concepts that have been coming through. And the market's been going great. Like, when can we have it? This sounds amazing. Like, yeah, this is exactly what we need. And it's, the market's been incredibly positive about it. And I think one of the reasons has been because the focus has been on people. The focus has been on how we are going to make their lives easier. It hasn't been about replicating it hasn't been about taking today's processes and moving it into digital, right? Which is, I think, generally speaking, what has always happened in our market is that we put a digital sticking plaster over today's problems, but it doesn't make the problems go away. Right. So what we did in Dare was we said, okay, well, how can we tweak things? How can we change the process? How can we make a change to actually make things easier? Right. Do we really need these things anymore? What are they doing? What is the so what here? Why are we doing these things? Why did we do them in the first place? Okay, well, do we still need them? Okay, well, get rid of them then. Why are we even doing it? So that's the approach that we took with Dare, which focused on, what user experience do you want? What do you want to feel? What do you want to experience as a human being? What do you don't forget about the tools, forget about how. It's the what do you need, right? What do you need to do your business quickly, more efficiently, and how and when do you need it, right? And that's what produced the change. I think that's the difference.
And I've seen some of that work, Claire, and I think it's fantastic. And it was the first time I'd seen that really happening at market wide, because everything else I've seen in the market is about what tool do we need, what's the, it starts with a kind of particular point of view, which is usually technology is required. Whereas actually, seems to me that actually most of the time technology is not required. That may sound like an odd thing to say in London market, which is technologizing, but everything I've experienced in working on transformation with clients in insurance, and this is in insurance, has been, look, there's far more you can do with people, ultimately, without even looking at the technology.
Yeah. So Ben, I think that's a really important point, and that's something that we always strove to make clear in Dare was, this is all about people, okay? And what do we want these people to be doing? Do we want these people to be doing, bordereau processing? I mean, I'm sorry, but yawn, right? Can you imagine being your job is coming in and processing bordereau, right? I can imagine those individuals probably would be much more interested in a million other things, right? So it's about what is the quality of what we're offering our employees in this market, right? Even down to due diligence, right? One of my jobs, an audit, right? One of my jobs used to be reviewing due diligence packs and running an audit program, right? And I can tell you for nothing that a piece of machine can do that. A piece of AI can read your due diligence documents for you. It's already happening in the legal tech space, right? Even the lawyers are more advanced for us than us right now, which, that is an archaic industry, and they're managing, they're making progress. So we've got a bit of catching up to do, but you know what? Let's learn from that. Let's pinch all of that stuff, and let's, for me, digital comes in to get rid of the burden, right? Get rid of all of the stuff that I don't want to do, all of the guff. Make it easy and make it so that my job is more interesting and I'm doing the stuff that I'm good at and that I'm interested in at. And that's kind of, again, where we came from with Dare, is that let's use the people to do the stuff that's interesting and that's actually making a difference, rather than taking up 90% of their time with admin. Brokers in particular, that applies to as well, by the way.
And you said that there was appetite in the market for change, a real appetite and willingness and momentum. Has that been strengthened through COVID and the success of work from home? Has the conversation changed at all through that?
I mean, it's kind of really hard to say, Jeremy. Probably, probably. I mean, I've been going up into the city and there's no one really there still. It's increasing, definitely, and the people that are up there have been gagging to go back, and I know lots of people are desperate to go back, but nobody said that is the case to me during Dare, but I think what it really has done has helped people understand how online collaboration tools work. Whereas before they wouldn't have dreamed of having, a Teams call where they were collaborating together in a document. For instance, they wouldn't have dreamed of doing a workshop, if it wasn't in person on actual whiteboards with actual sticky things. Whereas the whole of Project Dare, we did it over Zoom with Miro, right? And we gave everyone access to Miro. So everybody was going in and putting sticky tabs everywhere. And it worked really well. It actually, in some instances, can I say, actually does work better. So when we started talking to people in there about the concept of there being online collaboration tools for cover holders, brokers and underwriters to collaborate over a proposition before it's brought, to market, that really then resonated with them. Whereas I think pre-COVID, I think they would have struggled with that concept and be like, well, no, we even had a couple of people comment in some of the workshops. They were like, oh, well, it's really quick. We just do it all by email. And I'm like, what, you mean the least secure means of transmitting any form of data to your company? Like, it's the most vulnerable point of your company, and you're transmitting, we're transmitting border rail left, right, and centre that aren't protected, so very valuable data, and secure business, IP that we're just transacting. Oh, and by the way, do you find that your firewall kicks it back because the detachments are too big? Oh yeah, we do find that a lot. Yeah, is that a bit inconvenient for you? Yeah. And are you still working in Word documents to track changes? Do you find that frustrating? Yeah, because we can never tell. We can never tell which is the most up-to-date version. You're like, okay, so maybe there are other ways of doing these things. And so yeah, I think there has been an increase in appreciation of different ways of doing stuff. I mean, a year ago we had anecdotals of brokers going into Lloyd's with their iPad because their brokerage house had deployed some new bit of kit and photocopying it so that they had a piece of paper. This is a year ago. So who knows? Hopefully this year might have helped change the dial.
Claire, I had someone on the other day in a group I was doing, and they said that one of the big brokers, they've been using instant messaging a lot, and I've always thought instant messaging is notably absent from this market because it needs that communication, not the kind of clunky email, copy everyone in type thing or something else. Would you agree with that? Is that kind of what we need? I just feel there's no fluidity to anything in the way the market does things.
No.
There's no sort of, look, let's just get on with stuff. I mean, Forex markets trades on Bloomberg on instant messaging. Massive amounts of capital move around this planet. And yet the Lloyd's market seems to go for these enterprise type things. If it looks like an enterprise thing, let's go for it, and that just depresses the hell out of me.
Yeah, no, I agree. Ben, I'd be wildly supportive of that personally. So one of the concepts that came out of Dare was instant messaging, was the concept of that, if you collaborate in one single space, the cover holder and the broker can be collaborating through instant message. That's all auditable, trackable. You can see, who's done what. And then, they can even invite the underwriter into the room to have a conversation, bring in that earlier collaboration between the carrier and the cover holder, right? And that all again is through instant message in a centralized platform, and it undoubtedly.
And presumably, Claire, because you know the regulatory and compliance end of this, that is relatively easy these days to sort of make compliant, that type of trading.
Yeah, absolutely. There are no longer any excuses, Ben. We can't keep using GDPR as an excuse. We can't keep using regulation as an excuse. We can't keep using these, Brexit as an excuse. We can't keep using these so-called barriers as excuses anymore, because they're not. Okay, they're just not barriers. There are always ways and means of getting things done if you go in with the right mindset.
It's really interesting about the mindset. We talk quite a lot, don't we, Ben, about change and transformation, and that also stems really from having a mindset that's open to that from the start, because otherwise you're constantly pushing against a brick wall or a door that's locked, whatever your analogy is. And I wondered whether you had a view on like some of the market initiatives, the Future of Lloyd's and things like that, it seems to it tells a good story about change and transformation, but I think misses out critical pieces, and mindset being one of them. I just wondered whether you had a view on those type of kind of central modernization initiatives.
Yeah, no, definitely. I mean, mindset is completely crucial. And it's tough, right? Because I see both sides of the coin in our market. So I've been lucky enough to work with the LMA and directly, face off against Lloyd's. And then, I've also been lucky enough working with the LMA to face off against the market. And it's really interesting because it's a wonderful, wonderful, diverse, complex market full of dichotomies. It's and you've got Lloyd's in the middle trying to please everybody, right? They have to please everybody somehow, and that's just not possible. So you've got Lloyd's in the middle going, you've told us you want change, so we're going to try and change, right? So there's Lloyd's sat there going, right, okay, you've told us you want to do something, so we're going to do it. And then they go out to the market, but they go, we can't do it on our own. We shouldn't be doing it in an ivory tower. We can't do it on our own. You're going to have to tell us. You're going to have to help us. And then, they go out to the market and say, can you give us people to help? And the market goes, oh no, we can't do that. We can't do that. Sorry, we don't have the time. Right. So then you have this like constant battle of Lloyd's doing the wrong thing, seemingly, or the market saying that Lloyd's is doing the wrong thing. When Lloyd's have sat there and gone, well, we asked for your help, right? We asked and you didn't give it. But then I see the other side, which is the market. The market, I hear every end of the spectrum. I hear every end from, yes, we're ready for change. Yes, we want to do this, and this, all the way through to the other end of, oh, well, no, I mean, we're still trying to get our heads wrapped around DDM. So can we not run any sort of project like LMA Dare? Because I just think it's the wrong time. And you're like, seriously, pull your head out of the sand. I mean, when it comes to the Sigma curve, it's so far in the past that we can't see it anymore. So we can't wait for you to wrap your heads around DDM. I'm sorry, but we just can't. So yeah, I see all ends of the spectrum. But then I also see time and again is people in the market providing loads and loads of time and effort and energy and workshops with Lloyd's, and then nothing happens, or something gets paused and doesn't get restarted again, and there'll be energy, and then you'll hit a wall and it doesn't go anywhere. One of the things that I worked on when I was with the LMA at Lloyd's was faster claims payments, right? Faster claims settlements. John Muir, okay, great example, being part of that, being part of the panel of people from the market who we involved. And it was, back in 2020 was the most supremely positive, energetic, active, driven project that I've ever worked on in Lloyd's, right? It was wonderful. We were all about how we can, not how we cannot, Everybody we engaged with was all about how we can do this, how we should be doing this. This is customer focused, right? If we could, the most customer focused part of the whole of Lloyd's, right? How do we get payments quicker to our customers? How do we eliminate loss funds so that our TPAs are never falling short of money again, right? We've done it, we solved it, we know how to do it. And still we're now in coming up to the middle of May, and we're still, silence on that at the minute. And that's what's frustrating when, back in September 2019, I started these conversations with Lloyd's and gave them the answer as to how we could eliminate loss funds forever in the market. And we're now in May 2021. And I was saying at the end of 2020, I was like, it is my absolute desire. Like I'm determined, right? The whole team, we were determined to eliminate loss funds by, Q1 22. You kept on saying, no, we're going to do it. We're going to get rid of loss funds by Q1 22. We can do it. And from what I can see from the outside looking in at the moment, due to a number of political issues, it just is still not quite there. So it can be frustrating.
So in the end, Claire, my contention is that competition sorts everything out. And you could argue to some extent that the institutional nature of the Lloyd's market, the London market, restricts competition or it controls competition. And I know competition is always controlled in some shape or form by regulators or governments, but do you think that competition now is beginning to get the upper hand? In other words, are these large organizations, large insurers, as it market consolidates, are they beginning to drive the agenda more? We've got Sequel 6, we've got things like that. They have had an impact in the past, I think, when that collaboration has happened.
Yeah, I mean, I don't really know how to answer that, to be honest, Ben. Look, at the end of the day, market powers play out, right, at the end of the day. And what we have here is that this isn't just about competition in Lloyd's. This is global, right? People now increasingly can get capacity anywhere they like. So why do they come to Lloyd's? They come to Lloyd's because they like the anchor on the bottom of the stamp. They come to Lloyd's because they know that there's claim certainty. They come to Lloyd's because they frankly sometimes don't have an option because the book of business that they're looking for capacity for is distressed because it's North American surplus lines, for instance. But increasingly we're finding, capacity outside of Lloyd's, or we're finding, Lloyd's syndicates that have a company arm that have got licenses for North American surplus. There's one syndicate I know who I was speaking to last week. They have now moved 80% of their DA book onto their company stamp. And the only reason that they've kept the remaining 20 is because it's funny licenses like, Canada, New Zealand. And they are looking at ways of getting those licenses outside of Lloyd's. So this is what I'm seeing. There's also a bit of an existential crisis around DA as well, if you really look at it, right? So if you read the tea leaves about how people are buying insurance, people are increasingly, particularly on household, going direct to internet, right? And you have to look at that. It's cheap, right? So carriers are providing policies directly to consumers via a web portal. Yeah. Less frequently are consumers going to their local retail broker, right? Who are liaising, who are the front for a cover holder, who have got their capacity back via a broker into London. Often in the DA market, there's carrier, broker, cover holder, wholesaler, retailer, customer. Right, that's a lot of excess dollars knocking around in that chain that are being added to the price of the policy. Right, so that's your existential crisis right there. Is that people increasingly are going direct to web, right, direct to website to buy insurance. Even SMEs, I'm an SME, I buy my insurance from Hiscox Direct. I don't need a broker for that, So there is a bit of an existential crisis, and I think the future of MGAs is, on the whole, for the lion's share, going to be that we'll use those MGAs because of their expertise and because they've got a really great website. They've got a really great engine, really great sales, really great brand. And that's Lloyd's existential crisis. Is Lloyd's sells itself on being able to underwrite anything and having real expertise, but when really on the whole delegated businesses, consumer SME on the whole, there's not a great deal of like complex liability goes through DA channels. There's a bit, but not much.
So it was really interesting to hear Claire talking there so passionately about her experiences in the London market, and particularly interesting to hear about delegator authority space. I mean, we talk about it a bit, but we're not experts in it, so it's nice to hear just how complex that is, and just the experience of trying to drive change in a complex market with lots of moving parts. It was just a really interesting sort of insight, I suppose, from Claire.
Yeah, it's a really big area, and I know that in my work I've come across DA in various guises, but more as a kind of unknown territory for a lot of people. It's always the sort of, wow, DA, there's a lot of work to do in that space. It's not very good data wise, and it's quite scary almost. You're almost out in the hinterland of insurance when you talk about DA, but it's clear from its size and its scale, and various of the carriers in London in particular, and Lloyd's as well, as Claire has explained, have that huge DA exposure. And it's also been a regulatory area, you know, an area of regulatory focus, obviously, for various reasons. And so it's, but I think what sort of I get from this, and it's fascinating, is just what a big prize DA is. And I think Claire's explained that really well, that if you can kind of sort it out, if that's the technical phrase for change, and I'll talk about that in a minute, you know, that would be a big cost saver for the market. And it's interesting, she said, you know, you leave the acquisition cost to sort themselves out after that, because then insurers can create value, and you're not all tied up in knots with the you know, the rubbish of duplication and admin and everything else. So that was really interesting. And I thought the whole piece about the customer conversation and the work that Dare has been doing as a project, I've noticed that as well before Claire spoke about it today. I was really struck that was the sort of work that I do in consulting when I'm talking about change and transformation. It's working with people, listening to them, starting with a blank piece of paper, trying to shed all the preconceptions and the stuff, you know, to get to what are we trying to do, what are we trying to achieve, and what does the customer want, what are we selling. So I think that is really positive and really to be encouraged in what must be hard yards, and she's described it very well. It's a killer, you know, to do, and I think we've always known that, and you know, and maybe many people will kind of fall by the wayside in terms of this, and eventually it will happen, but it's supposed to be happening soon, so we really hope it does. But it was great. Yeah, Claire's really honest and straight and bright, and she tells it as it is, which is what we want.
Absolutely. And we'll have the second part of that interview next week. We'll just pull out some really interesting clips for the second part, and we'll talk about those next week when we're back. So, Ben, tell us what you're doing this weekend and why you're not here live.
Well, actually, at this moment, my weekend has already started because I'm playing golf in the rain, and a gale force winds, which I'm fully expecting tomorrow. For gale force 8 or 9 is predicted where I'm playing in Dorset.
Oh my
God.
God.
As we speak, in the strange time-shifting world that is which we live in, I'm playing golf as it speaks. So I'm there for 2-3 days. So yeah.
Oh well.
I'll be kind of enjoying the evenings rather than the day, I think.
Yeah. There's always that, isn't there? Of course, you can go indoors now, can't you? You're allowed.
We have to go. There's 12 of us in total, and we all have to sit in groups of 6. But I think after a few pints, I'm suspecting that might break down.
Yeah. Well, you know, these things happen. There we go.
Yeah, I hope I don't come back with a fine or something. But you know,
I think it'll be all right. I'm not doing anything as exciting as that this weekend. I don't even know if I'm doing anything. I think it's still going to rain, so who knows? There we go.
No, it's not going to be great. I mean, look, I'm going away, and I would be normally pretty miserable about going. You know, that the rain had come for a weekend like this, but because we've been cooped up for so long, you know, quite frankly, anything. I'm going to take anything I can get now.
Good. Excellent. Right. Have a good weekend, Ben. Thanks for tuning in, everybody. We'll see you live.
Thanks, Jeremy, and thanks to Claire. Brilliant. Have a great weekend, everyone.
Bye.
Bye.
Burgess and Bolton's Weekly Wrap-Up.